You're tuned into Business Day right here on ET Now. I'm Avan Dabash. A quick check as to how the markets panned out this Wednesday before we take you through the top headlines. Well, we got off to a fairly heady start and we did manage to sustain at that level, but it was by the end of the day that there was an absolute divergence in the advanced decline ratio, and we certainly petered off from the high point of 59.70 that the Nifty did touch. You had quite a few real estate stocks which sold off by the end of the day, and it was just a marginal uptick of 10 points on the Nifty at 59.32. For the Sensex too, we saw a good start but ended up by only 50 points at 19,608. We'll get you all of the big stories after the headlines. US President Barack Obama continues his anti-resourcing out rhetoric in his State of the Union address. He proposes a minimum tax on income earned from offshore earnings. India reacts strongly. Commerce Minister Anand Sharma says protectionism is no good in any form. Exports edge up in January after declining for 8 months in a row. But trade deficit touches a record high of $20 billion as high crude oil bill weighs heavy. The 2G scam gets murkier. The CBI suspects a collusion between DB Realty's Shahid Balwa and former prosecutor A.K. Singh. Sources tell ET Now that the investigating agency is likely to grill Balwa on the alleged nexus. Former Indian Air Force Chief S.P. Tyagi refutes bribery allegations over the 3,600 crore rupee VVIP helicopter deal. In a chat with Times Now, Tyagi says the deal was signed in 2010, almost 3 years after his retirement. Those were the top headlines at 4. Straight to the big story then, and that's on Dalal Street, where you had the markets which came off from the high point of the day, and so we ended flat but nonetheless in the green, which is a rather heartening factor. For the broader markets though, once again that selling pressure was absolutely evident. They haven't managed to see any respite barring yesterday, and once again it was in the red for the broader markets. In terms of sectoral movers, well, it was IT and technology as the pack which really spearheaded the gains. On the downside, though, you had real estate, power, as well as metals as sectors which sold off. Some of the big gainers for the day included HCL Technologies, Tata Motors on positive JLR numbers, ONGC reacted strongly, and you had an HDFC too, which was higher by 1.5%. Some of the big earnings that were put out today, IOC came out with its numbers, and that fairly did well for itself. The Q3 profits were higher by 34% to 3,332 crore rupees. You had the top line growth too, which inched up this time around, and the other income came in at 957 crore rupees. The net sales were 1.15 lakh crores versus 1.07. The gross refining margins for April to December stood at $2.22 per barrel. NMDC too put out its numbers but didn't react very well. You had the profits which were down by 30% at 1,293 crore rupees. The top line growth also tapered off by 27% to come in at 2,074 crores. Unitech from real estate, which has been in focus of late, also put out its numbers. The profits were higher by 52% at 84 crores, and the sales came in at 645 crores. This is vis-a-vis a figure of 514 crores last time around. EBITDA margins shrunk to 17% almost versus an earlier 20.8%. Some stocks in focus, and once again it was Realty which hogged the limelight. DB Realty was smashed in the session as the CBI sources indicated that they are likely to question Shahid Balwa again on his links with A.K. Singh, as they suspect that he had talks with Shahid Balwa about a legal strategy. Remember, yesterday it was Sanjay Chandra, and today DB Realty cracked on the back of that news. The entire UB group today was in the limelight on the downside, so the likes of United Spirits, UB Holdings, as well as Kingfisher Airlines, as most of the lenders recalled the loan to the company, saying that they have given enough time to the airline and have seen absolutely no progress by Kingfisher Airlines so far. 5% off on account of that news. HPCL, that one put out its numbers post-market hours yesterday. It was down 3.5%. The net profit came in at 147 crores versus 2,727 crores. So that's a downtick of nearly 100%. You had the income from operations, which came in at 53,413. So that did witness a good uptick. Refining margins stood at $1.92 per barrel versus $4.09 per barrel last year. Away from that, you did have Motherson Sumi, which reacted very well to its positive news that it has approved a QIP of up to 4.4 crore shares, okaying a preferential issue of up to 1.4 crore shares to the promoters. Some of the index losers today, Reliance Infra sold off, as did the entire ADAG pack. You had Tata Power, which was in the limelight on the downside. Sesa Goa as well as Bajaj Auto didn't see any traction. Some important flashes then coming in on your screen, this pertaining to IOC. They have said categorically that they will hike diesel prices by close to 40 to 50 paise per litre between 15th and 17th of February. Remember, most of the oil marketing companies have been battling with exceedingly high under recoveries, and this is in a step in an effort to reduce the same. There was a buzz going about on the street that perhaps come Monday next week we will hear about some diesel and petrol hike prices, and now you have the management confirming 40 to 50 paise per litre will be hiked by 15th to the 17th of February. Well, that's the latest news coming in. We'll get you more details as and when they do filter in. But in the meantime, time to hear out some expert voices sharing their market view with us. Manishi Ray Chaudhary of BNP Paribas Securities believes that Indian equities are taking a breather after a sharp rally, whereas Manish Sonthalia of Motilal Oswal remains positive on the equity markets.
After that significant rally that the market had from around mid-September onwards, it actually resulted in significant outperformance by India till around mid-January or so. And so the market had to take a breather because some of the stocks which investors would like to buy, in private banks, industrials, autos, they had become possibly a little too expensive or, close to the upper end of their valuation ranges. 14 to 15% earnings growth in fiscal 14 may actually be realizable. We also think that the phase of downgrades, earnings downgrades in India, is possibly on the last leg.
The fact remains that liquidity is very, very tight, and DII selling continues unabated. I think some of these factors could be mitigated in the coming few weeks, on top of pretty decent earnings season that would conclude tomorrow or day after tomorrow. So I think I remain positive on the markets.
Meantime, overseas, you had U.S. President Barack Obama, who pledged to revive the sluggish U.S. economy by creating jobs in his State of the Union address. His proposal to introduce an offshore tax on offshore earnings may add to concerns now for India's IT companies. Let's hear out some reactions on the same. You had Commerce Minister, in fact, Anand Sharma, who believes that while any barrier will be counterproductive for the global economy, that may delay economic recovery.
What is expected of nations, governments and leaders is to bring down the existing barriers and not to allow coming up of new barriers of protectionism, which will be counterproductive for the global economy. They'll deepen the recession and delay the recovery. We are waiting for the new USTR and the new US Commerce Secretary to assume office, and I'm looking forward to re-engaging with them on all issues.
In fact, ET Now's Chandra R. Srikanth caught up with Vice Chairman of Cognizant, Lakshmi Narayan, who said that business will have to adjust to varying tax norms of countries.
Tax is something that is, while it's a minor irritant, it does not have such a significant impact on the growth or the margins of the industry. And that's something that the industry and companies like us have managed very well over the past, and that I'm sure will continue to do so.
Okay, let's also address the numbers coming in on your screens. And Tata Steel has posted an absolutely abysmal set of numbers. Remember, we weren't going into the quarter with too much confidence. We were expecting a loss in this quarter of close to 230 crores, but this has far exceeded that. So the bottom line figure has come in at a loss now of 763 crore rupees. This coming in versus a loss of 603. So it has expanded significantly from last time around. You do have the net sales figure. This has come in largely in line with what we were expecting. That's at 31,822 crore rupees against an ET Now estimate of 32,000 crore rupees. So this has seen a marginal downtick too on a year-on-year basis. Remember, for India, it was the high steel volumes high sales volumes which were expected to propel the growth this time around. But obviously, it's the revenues this time around from Europe also which has seen an impact perhaps on account of the lower steel prices as well as the volumes. Remember, the steel prices in Europe are at 2-year lows, and obviously that rub-off effect is playing out on the consolidated numbers of Tata Steel this time around. It's a largely disappointing set of numbers given that the loss has significantly widened from last year. Operating margins, were expecting an improvement at that at a close to 7.5% versus 5.3%. We'll stand by and wait for those numbers to come out. In terms of the realizations, that for the Indian operations is seen at close to, EBITDA per ton is seen at close to $258 per ton, and the realizations this time around are seen lower by 3%. We do have the EBITDA margins, and that has come in pretty much with what we were expecting, 7% versus a 5.3% last time around. So you do have Tata Motors, which on the bottom line front has seen rather disappointment. The net sales figure has come in largely in line with what we were expecting at 31,822 crore rupees. Let's just pull up the stock price of Tata Steel. Remember, it has seen quite a bit of a drubbing ahead of the numbers. As pointed out, the street wasn't going in with too much of an excitement. It was down by close to 2.3%, and you will see an adverse reaction to the stock come tomorrow. For now, those are the three details that we have with us at hand. Margins at 7%, a loss widening, and top line growth largely in line with what the street was expecting. But away from that, in terms of some macroeconomic data today, green shoots of recovery appeared for the economy from the trade data. The latest numbers show the export for the month of January rose modestly by 1%, while the imports rose by 6%. But the trade deficit remained at a staggering $20 billion. While expressing his relief over the slight uptick seen in the January exports, the Trade Secretary, S.R. Rao, remains concerned over the high crude oil imports, leading to an increase in the current account deficit. He does, however, expect a better export growth going forward.
The worrying aspect, as usual, is the widening trade deficit. And our figures show that there is a substantial increase in the import of petroleum and crude oil, which is widening this trade deficit. As you are aware, the government have announced a special incentive package which came into force from 1st January of this year. As we go forward, we are hopeful that the export performance should improve significantly.
Big results are out. Tata Steel and it's posted a disastrous set of numbers. Let's take it straight to Gargi Parikh to get more details. Gargi, is it largely the European operations which have played a spoiler?
That's right, and as expected, it is the European operations which have been weak in this quarter for Tata Steel. But if you look at the overall picture, the bottom line at least, that has been way below what we were estimating. The street was estimating close to 250 crore loss on the bottom line, but they've posted about 763 crores loss. That's versus about 603 crore worth of loss that they posted in the same quarter last year. So clearly much below what the street was estimating. But if you look at the overall operational performance, they've posted an EBITDA margin of 7% on a consolidated basis versus about 5.8% if you're comparing with last year. So we had estimated around 7.5% on the operational margin, which is more or less in line with what the street was estimating. Remember that there are a couple of factors that have influenced the operational performance that we have seen in this quarter. If you only take the Indian operations, which have been more or less with what we had estimated, if you look at the sales figure, they've posted over 9,300 crores this time around versus about 8,300. So that increase really coming in from better sales volumes. If you look at realizations on a year-on-year basis, they have surely fallen. About 3 to 4% is what we are estimating. Also, if you look at the margins of the Indian business, that too has been, more or less above what the street was estimating, clearly stating that Indian operations is not where the problem lies. The European operations, however, on an EBITDA front, have posted a loss. We will await the management's comments on what is the EBITDA per ton. The loss on the EBITDA per ton front for Chorus, at least, that will be an important figure to see. But overall, it's a bad number coming in from Tata Steel, especially on the loss front, which is about 763 crores. The other income also, if you compare with last year, It's only 55 crores versus 250 crores that we had seen last year. So that too has played spoil sport for the bottom line of Tata Steel.
Thanks very much, Gargi, for summing it up for us. A lot of management commentary is awaited, but as Gargi pointed out, it's the European operations which has seen an EBITDA loss also this time around. The other income has also been poor, and the Indian operations, safe to say, have been fairly decent this time around. We'll await the management commentary and the reaction on the stock price come tomorrow. But meantime, to the aviation space then, and a day after the bankers pulled the plug on Kingfisher Airlines, the Civil Aviation Minister Ajit Singh says that unless the government is satisfied that Kingfisher is financially stable, there is no question of granting the grounded airline a new license.
Kingfisher also owes banks thousands of crores, so it's between the banks and the Kingfisher. Our concern is that before we allow them to fly, they should have enough financial depth, and they should have trained pilots and engineers. So they really have not given any plans to DGCA. DGCA is not satisfied with what our plans have been given.
The 2G scam is getting murkier by the day. Sources tell ET Now that the CBI suspects that AK Singh also colluded with others accused in the scam, most notably Shahid Balwa. The CBI is now likely to question Balwa in this respect. Let's get it Suchetna Ray, who now joins in with the latest details. Suchetna, now after Sanjay Chandra, is Shahid Balwa in the fray?
That's what it looks like. CBI sources tell us that the agency is suspicious that AK Singh did not limit his conversation and legal advice to just Sanjay Chandra. In fact, after a close analysis of the tape many times over, sources tell us that the agency believes that AK Singh had not only spoken to Shahid Balwa just like he did with Sanjay Chandra, but also had pointed out the loopholes in Balwa's legal strategy, and that is why they've put a team together. This team will look into the possible damage that this tape has done and the possible damage that AK Singh's information has already done to the prosecution, 2G prosecution so far. The team is also probing the possibility of AK Singh extending his legal services to others in the 2G accused as well, apart from Sanjay Chandra. Sources in CBI tell us that they are certain that Shahid Balwa was one of the accused with whom AK Singh did have a conversation. That is why they are likely to interrogate Shahid Balwa in the days to come.
Thanks very much, Suchetna, for bringing us all of those exclusive details. So an interrogation for Shahid Balwa is now likely. Moving on then, and former IAF chief SP Tyagi today refuted allegations that he was paid bribes to swing a 3,600 crore rupee deal for procuring 12 choppers from Italian firm Finmeccanica to very VVIPs. In an exclusive chat with our sister channel Times Now, Tyagi said that he is innocent and that the deal was signed in 2010, whereas he had retired in 2007.
Contract was signed in 2010 and I had retired in 2007. But the tender was floated, or the RFP was sent in 2006 when I was the chief. So there is no doubt about it that I was part of this process. The requirements were changed in 2003, long before I became the chief. But to the best of my knowledge, no such changes have been recommended by the Air Force. So I don't know why, I mean, the charge that I favored this company in any way can come about.
On that note, we come to an end of this edition of Business Day. Thanks so much for watching. Keep it with ET Now for all the latest news and updates.